Hey guys, I hope you guys are going to have an awesome weekend. Got a lot to talk about, but one thing that I think everybody should keep in mind is that the election's coming up. I don't want people digging too deeply into what's going on every single day. The last couple days, the market's been down. The market will probably be up tomorrow or Monday. It's just going to go back and forth. Really, what I want you to do, and the best thing that we can all do, is kind of look at the charts and wait for decisive moves in the market and then follow that decisive action. So let's look at a few of these charts. Our no chart one is the XLE. So if you look at the XLE, you're basically seeing that there's two ways to go here. We can either go up or down. That could usually be said about anything, but when we see consolidation, that's usually when we see those moves turn into decisive moves, either up or down. So we see consolidation here. I think the easiest trade here, once again, is to continue to wait for that trade. Wait for that break above that 96.21 level and get a close up there, or wait for it to break down and follow that. So once again, somebody asked me a question today, which is, how do you figure out where you're getting out before you get in? And so there's a bunch of different ways to do it. Targets is a way. And the question was asked for me specifically, and really, you got to figure out what works for you. I don't think targets is the best way to do just about anything unless you're trading options. So I think the easiest thing to do is to go, okay, like, what's my exit signal going to be? If I enter this trade above 96.21, what's my exit signal? And that could be a 50-day low. That could be a moving average crossover, like a 10 and 40 pair, 10 period moving average crossing below a 40 period moving average. That could be a hit the bottom of a Bollinger Band. There's a million different ways to look at that. Or you could be a person who gets out on a trailing stop. I think you should be able to do both of those, meaning you have let's say a 50-day low is your exit signal, but also you have a trailing stop just in case this thing hits that first. Most of the time, you're not going to hit your trailing stop, but you want it there just in case you have a catastrophic loss or something that just you can't really plan for. For example, if something's just skyrocketing higher and then it drops, 20% pretty quickly, your exit signal is not going to hit. But a trailing stop loss will at least keep most of your money safe. And so next chart is Bitcoin. So Bitcoin actually broke out for a second and got above that 71,300 level I kept talking about. However, came right back below it pretty quickly. Not too concerned about it. A lot of people love to watch monthly closes and so on, but really, um, I want to see what it does this weekend. Bitcoin has a tendency of making its really decisive moves over the weekend. It's done that for many years. So let's wait until over the weekend, see how futures open in Bitcoin on Sunday night, and then go from there. Next chart is the Nasdaq. QQQ ETF. So basically, it's just at the same thing. It's a make or break point. This is what I keep saying about the election. It's not that you have to, front run this. Like, this is you front running it just means you gained another 2% of the move. Like, we're not playing for 2% moves. We're playing for 30-40% moves. So if we're playing for 30-40% moves, why do we care about this little bit of movement that can happen before the breakout? So wait for the breakout, get a close above that level. Trailing stop on the Qs, that is about 13%. So you got a 13% trailing stop. Exit signal, once again, you have many different ways of doing it. A 50-day low, 60-day low, however you want to do it. There's lots of ways to doing your exit signals. Next chart is biotech. This is another one that'd be very good to buy options in. And so I'm also going to make a note of that as we're doing this. I'll post those next week on Monday for our paid subscribers, but on the free one, I'm going to make a note of look to buy options. So that's just a note for you guys to keep in mind for next week as we get into it. I don't really want to buy options before the election, so I want to buy them after the election. So make that note as well. So look to buy options after the election because the event risk is going to come out, and that's when we're going to want to get into the options, even if the move front runs that. we will make more money holding till after because options are priced using volatility. Next chart is TLT Treasury Bonds. So Treasury Bonds made a 52-week high and then reverse. That is something I really don't like seeing. If we're looking at the bond market or just anything that's trending, that's a really bad signal. So once again, we're short the bond market at the moment. I like that idea. We were long the 2-year all the way to the 30, and then very quickly that changed. So right now we've been short the 30, the 10s went short, the 5s went short. We're still waiting to short the rest of them, but for now the rest of them are neutral. The 2-year was hanging around for a while, and now it's not. So once again, things change, and you have to change when the evidence changes. And not to mention, I have had the bearish bond thesis for a long time. I do think bonds are just not the place to be for years. We could make a couple swing trades and make some money like we did, but we're not going to probably be able to just hang out in it for years again. The next chart is gold miners. Gold miners are very close to a breakout, but I put these two charts together for a reason, which was silver. Silver already made its decision. So if you look at that breakout zone, silver broke out a long time ago. So that same level that the gold miners can't get past, silver already got past, and it pulled back, it dipped back into that support zone, and now it's moving higher again. So once again, I think gold miners will probably move next. That's probably where you're going to get your major alpha on a trade. Next chart, this is major US sectors. So only the thing I'm pointing to here is that all of these are still holding on to the primary trend. None of these have broken the primary trend at all. They all look really good. Smooth trends, smooth trades here. So I think generally your idea as a trader should be when the primary trend is moving up, I want to be looking for buy opportunities. That buy opportunity can be buying dips, that buy opportunity could be buying breakouts, whatever it is, but we are still holding the primary trend in all of these sectors. So, all right, guys, hope you guys have a good weekend. And let me know if you guys have any questions, things you guys want me to cover on these Friday reports like this. I can always cover anything from analysis on whatever you're looking at all the way to risk management in the process. So, all right, guys, have a good one.